The full package of quantum trading indicators for NinjaTrader has been put together with one idea in mind: to help you become a more consistent and profitable trader. And of all the markets, the Forex market is an uncompromising one, and it is here more than in any other that tools and indicators can help you to make sense of the many complexities this market presents. However, no indicator, no matter how sophisticated, can ever replace your decision making as a trader. But what good indicators can do is give you complex information quickly, easily, and in a visual way, allowing you to assess an opportunity fast and trade accordingly. The full package of quantum trading indicators is a complete suite of 14 indicators and tools, all carefully developed by real traders for traders, and are the ones that Anna and I use every single day in our own trading, whether trading in both the spot Forex market and in futures. Now, if you're not familiar with who we are, this is us, David and Anna Cooling. We are both full-time traders and have been for many years, and we are the founders of quantum trading. And indeed, you may already have come across Anna through her best-selling books on Amazon, which have also been printed in several other languages, including Japanese and Chinese. And for us, it is humbling to think of so many traders around the world now following her work. We've been involved in both trading and investing for over 20 years, having started well before the internet even existed. Our entry point was unusual to say the least, as we began trading FTSE 100 futures on the Liffey exchange, now long gone sadly. All orders were executed and filled by phone, which was a stressful experience to say the least, but we survived and now enjoy our trading more than ever. All the indicators we have developed and included in the package are based on our own trading knowledge and experience of how the markets work, whether index or currency futures, commodities or stocks, and of course for the spot Forex market in particular. Each one has a specific and important role to play, and whilst each is freestanding in its own right, as a collective group, they provide a powerful and all-encompassing approach when meshed together. And of course, if you are familiar with Anna and myself, you will already know that our foundation methodology is based on volume price analysis, which underpins the complex world of the Forex market, where levels and flows are also key. This is because this market is one of mean reversion, where currencies and currency pairs move constantly from overbought to oversold and back again, driven by forces of market sentiment and risk, and coupled with all the technical, fundamental and relational factors which then complete the picture. And before I forget, please remember the full package of indicators from quantum trading is also part of our educational course, the Complete Forex Trading Program, which also includes live trading sessions with Anna and myself, along with a live chat room, which we call Trader Chatter, and exclusively for Complete Program customers, so we hope to see you there. Also remember, as a full package customer of ours, you will receive all future indicators we develop free of charge. This is something we offer to everyone who invests with us in the full package, so you never pay us any more. We simply add new indicators to your dashboard, and it's yet another reason to invest. It's just our way of saying thank you to you for investing in us, and is a way for us to give something back in return. So let's take a look at the full package of trading indicators from quantum trading and see what's included. And in very simple terms, the package breaks down into 5 broad categories or types of indicators, and these are as follows. First, we have the currency-specific indicators, which help you to make sense of the complexities of the Forex world. And these are the currency strength indicator, the currency matrix indicator, the currency array indicator, and finally the currency heat map indicator, and all have a different job, which we look at shortly. Next comes indicators that fall under the term price and volume. First is the Tickspeedometer indicator, a unique indicator which converts time charts to the equivalent in tick, and so delivers the optimal settings for intraday traders in all markets and instruments. Then we have the dynamic volatility indicator, a simple but very powerful indicator. And the third of our indicators here is the dynamic price pivot indicator. The next group of indicators covers support and resistance, which is a key part of any technical approach to trading. And the first here is the dynamic accumulation and distribution indicator, which considers support and resistance from the perspective of supply and demand. This is complemented with the volume point of control indicator, which embraces the price, time and volume relationship, and so moves volume from the x-axis of time to the y-axis of price. Two trend and momentum indicators come next, with the trends indicator helping to describe trend changes and, equally important, trend congestion, so works close to the price action, whilst the second of these, the trend monitor, takes a more considered view and smooths out many of the minor reversals and pullbacks which occur in all timeframes. Finally, we come to the three indices which describe individual price action for the three most important currencies: the single currency of the euro, the Japanese yen, and last but not least, the currency of first reserve, the US dollar. These are charts just like any other and reflect currency strength and weakness from a technical perspective. So now let's take a look at each of these indicators in a little more detail. And if we start with the first group, which is the four currency-specific indicators, and beginning with the currency strength indicator. The currency strength indicator disassembles the forex world into the building blocks of the market itself, the 8 primary currencies, and this indicator has been designed to tell you instantly which currencies are rising strongly, which are falling strongly, and those which are moving in a range. In addition, and equally important, the indicator also reveals when a currency is approaching an overbought or oversold state, with a possible reversal or correction in trend. The 8 currencies are displayed as individual coloured lines, making it quick and easy to spot trading opportunities. If one currency is rising strongly and another falling strongly, then a strong trend is likely to be developing in that pair. But if two currencies are rising or falling together, then that pair is likely to be in congestion and may not be one to consider at present. Equally, if one currency is strongly overbought and another is strongly oversold, this is likely to be the signal for a potential reversal or pullback in trend. Here it's a case of getting in early and maximizing profits as the new trend is established. Now, changing timeframes is a breeze, and within seconds you can see how all the currencies are performing from 1 minute to 1 month and back again. And then it's over to the charts for further analysis. By contrast, the currency matrix indicator ranks the 28 currency pairs in a leaderboard of strength and weakness in your chosen timeframe. Here you will see instantly those currency pairs which are rising, those which are falling, and those at the extremes of strength and weakness. In addition, by selecting one currency, the pairs in that currency complex are highlighted, which then confirms whether sentiment for the currency is universal across the complex, a key issue, as we always want to be trading with the universal flow. In other words, think of sentiment as a river. We want to be rowing in the direction of flow and not against it. The currency array indicator takes us to the next level of analysis of currency strength and weakness. Now we want to see the strength of the trend in all 28 pairs, which is what this indicator is all about. The currency indicator instantly reveals trend strength graphically and in all time frames. In other words, which currency pairs are trending higher and lower with the greatest speed and momentum. And as you might expect, it also displays those currency pairs which are currently in a congestion phase with little or no trend. But as the trend is developed from the center outwards, so the angle of the trend line increases constantly until it approaches or reaches an extreme on one side or other of the array, with an overbought or oversold signal then generated on the ranking ladder alongside on the left. Finally, in this group comes the currency heat map indicator, which delivers a two-dimensional global view of risk and sentiment on one chart, vertically on the ranking table and then horizontally across the horizon of time, presenting this information instantly, simply and powerfully. The table tells us whether a pair is bullish or bearish across all the time frames, so giving us an immediate view of sentiment for the pairs. So if the performance score for a pair is negative, then it is bearish and each cell of the table is painted red. But if the score is positive, it appears green. And when viewed across the time frames, this then provides a real-time view as sentiment strengthens or weakens, with time then weighted accordingly to provide the ranking ladder on the left of the indicator, which reveals the current standings for strength and weakness dynamically. Now let's move on to our second group, which is described as price and volume indicators, and starting with the dynamic volatility indicator. The dynamic volatility indicator has been developed with one objective in mind: to confirm volatility in real time and clearly on the price candle the second it arrives. And you may be asking why this is important to know, and the answer is very simple. This is when the insiders are active and setting out to trap traders into weak positions. Volatility is generally associated with news or events, and when it occurs, the insiders take advantage. This is why the price action generally reverses and retraces back within the spread of the candle, trapping traders into weak positions. The pivots indicator is another simple yet powerful tool, but if we start with what it is not, it's not a signal reversal indicator. What it is a signal of short-term changes in sentiment over 3 price candles. And used in this way, the indicator then helps to describe when markets are moving into a trend phase or developing into a trend or congestion. The indicator does this by considering the arrangement of the pivots as they arrive in real time, which then help to describe the price journey as it develops. Because it goes without saying that understanding price action and being able to determine where the price action is heading at the live edge and in real time is one of the keys to success. This simple but elegant indicator helps to deliver this analysis visually and clearly and in all time frames. Finally, in this group we come to the Tickspeedometer indicator, and one which falls squarely in the domain of intraday scalping traders, and which can be applied equally to all markets, whether commodities, bonds, indices or stocks, and of course Forex. This indicator solves several problems simultaneously, and the first of these is in helping traders to establish the correct value for the associated tick charts dynamically, and there are 2 issues here. First, this number changes constantly throughout the trading session, and second, the optimal settings vary hugely from one market to another. For example, the optimal setting for a commodity will be vastly different to that for an index or currency. But without this indicator, it's impossible to arrive at the correct tick values, as the indicator allows traders to then trade at the speed of the market. So no more guesswork. Moreover, the indicator also allows traders to blend the best of time-based trading analysis with the benefits of trading non-time-based charts which reveal momentum, and tick charts do just that. Finally, the indicator also signals when activity in the market is high, medium or low, thereby helping traders to participate when the market is active and stand aside when it's in the doldrums. And now we move on to support and resistance, which is one of the fundamental building blocks of technical analysis. And whilst lines can be drawn and redrawn manually, these indicators do all the hard work for you. And the first of these is the accumulation and distribution indicator, which has been developed to display two things simultaneously on the chart. First, the regions of accumulation and distribution themselves, which are those regions where repeated insider buying and selling has duly created a region of price congestion, and from that, the associated price levels of support and resistance. Second, the indicator then displays the strength of these regions graphically by the thickness of the line, and also confirms this numerically by the number of times they have been tested and from which direction. This then translates into a visual picture of the accumulation and distribution zones themselves, and if tested repeatedly from above, this translates into a region of potential price support and appears blue, but if repeatedly tested from below, then this is likely to act as a ceiling of resistance in the future and is painted red, and the thicker the line, then the stronger these regions are likely to be. The second indicator then considers support and resistance from the perspective of price agreement and disagreement as confirmed with volume. The volume point of control indicator displays a histogram of volume and volume nodes, which describe the high and low volume regions against price, where price has paused in the past and transacted volume has duly built. So where there is a heavy concentration of volume, then clearly this is likely to act as support or resistance in the future for two reasons. First, there may be traders locked in these regions and waiting to exit, and second, this is clearly an important area of price, and if it was important in the past, then it's likely to be important in the future, and therefore provide a stopping point for congestion. Equally, where low volume concentrations exist, then the market is unlikely to pause. The volume point of control itself describes the maximum concentration of volume on the chart, and price will only move away from this region once sentiment has shifted to one side or the other. And now we come to another important group, which is the trend and trend momentum indicators. And whilst there are only two shown here, the trend monitor is in fact two indicators in one, making a total of three. First, we have the trends indicator, which is extremely sensitive and helps to describe trend and no trend phases of price action visually and quickly. It does this using the trend dots, and whilst the trend higher and lower are easily understood with the associated color changes, the indicator also changes color when a trend is becoming exhausted, and so the trend dots change color to a different color which reflects and signals this fact, and these changes which are important, as any congestion phase may be a temporary pause, but equally might be the start of a full reversal. And whilst the trends indicator works very close to the market price action, the trend monitor steps back and considers the trend over a longer period, and so smooths out all the minor pullbacks and reversals which occur in every longer term trend. And as we know, staying in a trend to maximize any return is the hardest thing to do in trading, and is one reason many traders find it so difficult to progress. The trend monitor has been created and developed to help with just this problem, and only changes color from bright red to bright blue, or vice versa, once a change in trend has occurred. But it also signals pause points with a change to a darker shade of color. The trend monitor also has an inbuilt secondary indicator, the trend line, which works off a midpoint reference line and so helps to provide perspective both on the strength of the trend and also on any extreme and potential exhaustion point. And now we come to the final group of indicators, but which are not indicators at all in the purest sense. Instead, they are important price charts of the most important currencies in the trading world. These are the price charts for the US dollar, the Japanese yen, and the euro. And if you can follow and analyze these currencies with confidence, then this is 90% of the battle of trading Forex, or indeed any market, since both the US dollar and the Japanese yen are safe haven currencies, with all commodities also priced in US dollars. First up is the JPYX index for the Japanese yen, and is constructed from 4 major currencies, all equally weighted at 25%. As with all of these indices, the indicator works in all time frames from the fastest to the slowest, and so provides traders with an instant view of sentiment and risk through the prism of the Japanese yen. Next comes the US dollar, and again uses exactly the same approach in its construction. In other words, 4 major currencies, all equally weighted, which then deliver a clear and balanced view of the US dollar as sentiment ebbs and flows across the markets. This is very different in construction to the Dixie index, which, in our humble opinion, is overly weighted with European currencies such as the euro. And indeed, speaking of the euro and the single currency, this is the third which makes up our trio of index charts for the major currencies, and again takes this very simple approach of a basket of 4 equally weighted currencies to provide a balanced view for the euro, which is generally considered to be a risk currency. And of course, whilst the full package is a complete suite of tools and indicators, there is nothing to say you have to invest in all of them. Indeed, many of our customers decide to choose only those which suit them or fit with their own trading style. So the choice is yours entirely. Start with 1 or 2 and perhaps add to them over time. Alternatively, you can of course start with the complete package. The decision is yours entirely. I hope this video has given you a flavour of what's included in the Quantum Trading Indicator package, but if you would like to discover more, just head over to the Quantum Trading site at www.quantumtrading.com, where you will find a host of videos and support pages which explain the indicators in greater detail. And for more information on the complete Forex trading program, please go to www.quantumtradingeducation.com. And both Anna and I look forward to welcoming you as a customer of Quantum Trading, and also wish you every success and good fortune in your own trading endeavours. Trading is not easy, but it can be immensely rewarding, and part of the pleasure of trading comes from making sense of the financial markets with the indicators there to help and support you in your own trading journey.